Hello and welcome to Global Research Unlocked, where we discuss what's rising from growth industries to rising risks and opportunities in global markets. I'm TJ Thornton, Head of Product Marketing at BofA Global Research, and we're recording this episode on Thursday, July 2nd, 2026.
Something that we've seen be popular. In my opinion, one of the biggest areas of potential expansion on the consumer side is they're launching a lot of pop culture markets, and we've seen a big uptick in advertising from both Polymarket and Kalshi on these cultural markets. So things like Taylor Swift's wedding, where is it going to be, when is it going to be, The Bachelorette or Love Island or different reality shows trading on contestants, how long they last through the year or through the season. And I think sports betting has always been 90% male and 18 to 35. So if you can attract more female users, then that would be a big TAM expander relative to a traditional sports betting platform.
Prediction markets show few signs of a slowdown. In fact, thanks to some high-profile sporting events, volume growth has shown sequential acceleration. But especially if you believe this growth continues, there are many questions to answer, from which categories may be the next big ones for PMs or prediction markets, to regulatory risk, to what to make of the prediction market offerings coming from new entrants. Joining us today to discuss this is Julie Hoover from the Gaming, Lodging, and Leisure team. The team was early in writing about these markets. They continue to put out some really interesting notes, and Julie has been instrumental, along with Sean Kelly, in really getting the team identified with the theme. Thanks, Julie, for joining us today.
Yeah, thanks for having me, TJ.
So, Julie, it's been a busy time for prediction markets with the World Cup and the Knicks. So the recent weeks may not be exactly normal, but where are we tracking now in terms of U.S. prediction market dollars on an annualized basis? And where is that expected to be in, say, 2030?
Yeah. So all through the past year and a half, prediction market growth has just been really exponential. The last July till the first week of July, the last 7 days, volume on prediction markets has 60x. And just since the start of May until the most recent week, volume has doubled. So we're seeing really exponential growth that continues to go. And right now, weekly volume is at $13 billion. And if you annualize that, that's $670 billion. To contextualize it in terms of the World Cup and how much is coming from that, about half of all volume on prediction markets right now is coming from just the World Cup, and about 80% of all volume remains on sports on prediction markets. While the World Cup is a huge event, we're also seeing growth stem from new entrants come into prediction markets. So DraftKings recently launched their own prediction market offering. Robinhood moved away from Kalshi and onto their own vertically integrated exchange. Crypto.com, Coinbase, Polymarket. So there's just a lot of new entrants who are really starting a marketing push, which is helping volume surge during the World Cup. In terms of outlooks by 2030, Eilers and Krejcik, which is a gaming consultancy firm, they estimate that total volume could reach $1 trillion by 2030.
Okay, understood. And actually, compared to, you said 670 billion annualized, 1 trillion, not all that much higher. So yeah, that number may wind up being low, but how does that compare to the size of traditional online sports betting markets today?
Yeah, so prediction market volume and sports betting handle, which is the volume metric that we use for sports betting, aren't totally comparable. So volume on a prediction market is matched volume. So if you're the market maker and the market taker, it's counting both sides of that, where online sports betting handle is only counting the market taker side or the consumer side. So in order to get from prediction market volume to online sports betting handle, you at least have to divide by 2. But something we're seeing right now on prediction markets is parlays are really taking off. So parlays are types of bets or trades where you're putting multiple legs together. And in scenarios like that, the consumer is only putting down 10 or 20 cents, and the market maker is putting down the other 80 or 90 cents, which makes that conversion factor even bigger. So we divide by 4 on prediction market volume to get to consumer volume. And that would be about $170 billion of equivalent online sports betting handle. We expect that the total online sports betting market will be around that same range, $160 to $170 billion of handle this year. So from a pretty nascent start a year ago, it seems like prediction market volume is pretty much at parity now with online sports betting handle. And once again, we're annualizing some of the best weeks we've ever had in prediction markets. So we'll see how it turns out in the second half of the year and football season.
Okay. Super interesting. And sort of to that point, as you just think about it from a consumer perspective, you're using one of the traditional online sports betting platforms. You bear the taxes paid by those operators, because I know there's heavy taxes that they've got to pay, that the states levy on them. You're paying some sort of VIG. It's different with prediction markets, which aren't taxed by the states. So, is some of that growth a result of the economics just being that much more favorable from a consumer standpoint if you're using prediction markets versus OSB?
Yeah, it's a good question. So on what the consumer is paying in a sports betting framework, you are right. There's a vig embedded into the line, so a minus 110% line, which is a standard line for a favorite to win a game. That embeds a 4.5% vig for the sports book, or that vig is their take rate. On a prediction market, the fees that the consumer are paying are broken down into two places. So first, most markets that you'll see on a prediction market don't have 50-50 odds. It's most of the time it's 50 to 51. So there's a 1% like vig in there that market makers are taking advantage of. And those are on the most liquid markets. And in some markets that aren't as liquid, the spread between the yes and no price could be 2, 3, or 4 percentage points. So that's one area. And then the consumers are also paying fees directly on most prediction market platforms. It's about a 2% fee of the total contracts that you're buying. So what we've seen so far is when you add in that market maker spread, the spread in the market plus the fees on prediction markets, the total price is pretty similar to what you would get on DraftKings or FanDuel. I think a caveat and something that we've seen, it's hard to know how much prediction market volume is coming from states with online sports betting. But for someone who's a sharp bettor, so someone who might want to be a professional bettor or has algorithms and they're making their bets based on a lot of data, typically those people who are winners get banned on DraftKings or FanDuel, or their bet sizes are limited pretty dramatically. So somebody who would not be able to bet a lot on a sports book, we think they're common market makers on a prediction market because market maker fees are a lot smaller compared to the 2%. They're about 30 or 40 basis points, or sometimes you're incentivized to market make to get volume on the platform. And in those cases, that's definitely a more attractive offer to people who are like professional bettors because they can play the house or play the book on a prediction market platform.
Okay, got it. So from a consumer standpoint, I guess the bottom line is actually the economics are not all that much different. Like it's not that much more favorable to place a bet on a prediction market than it is if I, were to go into DraftKings and do the same.
Right. One area that we're watching is, will there be any fee compression? So far, Kalshi has been the leader. They've had about a 2% market taker fee, and it's been that way for at least the past year, and we haven't seen any compression. Something we're watching as more entrants come into prediction markets is that consumer fee. Does that get competed down? And then does it become a more attractive offer on the consumer side because the total price is probably then a bit lower than a sports book.
So I know that for prediction markets, sports is still the vast majority. Obviously, we talked about just how much of the current market is just World Cup alone, FIFA World Cup. When thinking about other categories, what do you see as the biggest growth opportunity for prediction markets? I mean, is it financial? Obviously, there's lots of other categories that you could potentially bet on as well.
Yeah, I think biggest in terms of volume on the overall side would be on the institutional side. So if a hedge fund client wanted to hedge their exposure to a certain stock on earnings because there's one line item that they're unsure of and they just want to have a little bit of a hedge there, Kalshi has KPI markets where instead of trading on DraftKings EBITDA or the stock itself, you can trade on the number of customers DraftKings acquires or like their gaming revenue. So they're adding in these KPI markets. So I think in terms of volume, that would be a big opportunity on the institutional side. I think on the retail side, there would be two areas that I would point out. Crypto markets have been growing very quickly. They are over $1 billion in monthly volume now and approaching 2 billion. Um, and there's crypto markets on perpetuals. So they recently launched perpetuals, and that's a new product. But the markets that are gaining a lot of traction on Kalshi are trading 15-minute up down markets on crypto. So in the next 15 minutes, is the price of Bitcoin going to be higher or lower? And that's a very gaming mechanic. So that's something that we've seen be popular. In my opinion, one of the biggest areas of potential expansion on the consumer side is they're launching a lot of pop culture markets, and we've seen a big uptick in advertising from both Polymarket and Kalshi on these cultural markets. So things like Taylor Swift's wedding, where is it going to be? When is it going to be? The Bachelorette or Love Island or different reality shows trading on contestants, how long they last through the year or through the season. And I think sports betting has always been 90% male and 18 to 35. So if you can attract more female users, then that would be a big TAM expander relative to a traditional sports betting platform.
Got it. Okay. That's funny about the 15-minute crypto bets, because it used to be that you could bet on crypto just going up, but since that doesn't really happen, I guess you have to bet on where it's going to be over the next 15 minutes. But I wanted to talk about some of the incumbent online sports betting companies, because they are now offering prediction market wagers. How are they doing with this? Are they gaining traction? And is the margin profile for that business different than with their existing businesses?
Yeah, it's a good question. So DraftKings just last week announced that they have their fully vertically integrated exchange on, it's called DKX. So they just launched. FanDuel has a joint venture with CME, but we think FanDuel's targeting more of the start of the NFL season to really make their big marketing push, where DraftKings is being a little bit more promotional now for the World Cup. So DraftKings is at about 2% market share right now. So really just starting from a standing start in March, they've gone from no market share to up to 2%. And they're providing weekly or bi-weekly updates, and we're continuing to see a lot of growth in their volume. For DraftKings and FanDuel, because of their online sports betting licenses in a lot of states in the US, they are only offering prediction markets in states without online sports betting. So it's about 50% of the population that online sports betting companies are gaining access to, and in big states like California and Texas. So that's really why they're going after this opportunity, and that's a big part of why prediction markets have become so popular, because sports betting isn't legalized nationally. On in terms of the margin profile, they're a little bit of different businesses. So on the online sports betting side, DraftKings and FanDuel are taking a directional bet on what the outcome is going to be. So during the NFL season, and actually just the Knicks win that you mentioned, the Knicks winning it impacted EBITDA by tens of millions of dollars, because so many bets came in on the Knicks side. So prediction markets are just a fee-based revenue stream, so it's a little bit different because you don't have that volatility. But with that, your take rate is also smaller. So in terms of margins, without having to pay taxes, your gross margins will be a lot higher. And then your EBITDA margins should also be that 25 to 30% higher. So yeah, it's definitely an attractive business model. And then there's no volatility. One thing that is interesting that DraftKings and FanDuel are both talking about is market making on prediction markets, both on their own prediction markets and on third-party prediction markets. So because they have history of pricing risk, and especially on parlays and harder to price bets, they're starting to market make on Kalshi and DraftKings on their own exchange.
Got it. And I assume that as some of these platforms become bigger, the liquidity of the markets improves as well, right? And so there is sort of this network effect where you get to a certain point, and you could rapidly get much larger because it becomes a more attractive place for consumers to go to bet.
Yeah, exactly. And I think that's why DraftKings is excited about market making on their own platform, because they have the pricing ability one, the liquidity, and two, the ability to price trades that someone else who's market making on another platform might not be able to do.
Got it. Okay. So you were talking before about, Love Island and that attracting a certain audience, but the World Cup is probably also an example of something that could bring in a new audience, maybe people who aren't your traditional, say, NFL fans. Are we seeing evidence of that to the extent that we have numbers? And do you think these new fans and bettors will stick around?
Yeah, so we'll start to get June data on the online sports betting side officially in the coming days. But right now, a metric that we do have is app downloads. So in the past month since the start of the World Cup, Kalshi has had 4 million new downloads, and I checked right before this. There's at number one in the overall app store, and it's been that way for a week plus. And DraftKings has also added about 800,000. DraftKings has one app now for sports betting and prediction markets. So there's probably a mix of growing their prediction market platform plus growing organically on the online sports betting side. A lot of the companies that we cover and in the industry were very excited and thought that this could be a new opportunity to acquire new customers. Ahead of the World Cup, DraftKings rolled out a Spanish speaking language app to attract a different demographic that maybe they haven't penetrated as much previously. So yeah, I think even just being in New York, seeing all of the tourists, you can definitely see that there's an energy around the US right now hosting the World Cup that I think people would be interested in betting on it too. And in terms of sustainability, I think that's always a big question. We're seeing pretty aggressive new user promotional offers right now during the World Cup. So bet five, get 300, bet five, get 350, which is a little bit higher than what we typically see. So I think the companies probably expect that they can retain some of these customers. And from a timeline perspective, it lines up well because the World Cup will end in late July, and then you'll get college football and right back into the NFL season in August. So I think the companies are optimistic that they can be able to retain some of these people. And the other big question is, will soccer just become more popular permanently in the US following this World Cup and just the World Cup more broadly?
Online brokers, including Robinhood, online stockbrokers, they've begun to offer prediction market products. As you were saying before, I think, in some cases they've been in collaboration with some of the existing players, and then, maybe more recently not. Is there a view in the investor community that you talk to about whether they may be the ultimate winners just because of how large the financial markets are, how large the markets in finance could be, and given the footholds that they already have?
Yeah, yeah. Robinhood, like you mentioned, they were previously partnered with Kalshi. About a year ago, Robinhood was making up 60% of all of volume on Kalshi. Robinhood was really one of the big drivers to get Kalshi volume and liquidity up and running early on. And then since then, over the past year, Robinhood now makes up about 20% of total volume on Kalshi. And then just about a month ago, they launched their own exchange called Rother, which is a joint venture between them and Susquehanna. So they have a liquidity provider as their JV partner. And right now they're still transitioning off of Kalshi. So Robinhood is only offering World Cup and MLB markets directly on their platform, but still relies on Kalshi for parlays, the economics markets, the crypto markets, and some of the and additional markets beyond that. And it's interesting if you look at app download data and crossover data, a lot of people who have Robinhood accounts have a sports betting account. And I think a lot of our clients believe that there's a similar psychology. If you like to trade options or day trade, then maybe you also like to sports bet. It's a different form of betting, perhaps. And then to your point, a lot of their customers are interested in finance. Some are interested in crypto. So to the extent that non-sports markets start to grow more rapidly.
Okay. I've got one more for you. We can't close this without talking about risks.
Yeah.
I think we're waiting on some court cases that could decide to what degree regulation of prediction markets becomes more onerous. I think
Yeah.
there's even a state, was it Nevada, that's banned them? Um,
Nevada has been sports markets, and then just this week, Michigan also got a temporary restraining order against sports event contracts.
what are the key events then to watch as we think about the regulatory?
Yeah. So right now, Kalshi and prediction markets more broadly are facing 15 to 20 lawsuits from different states. And we alluded to it earlier, but states generate tax revenue from online sports betting, and in prediction markets, they're not generating tax revenue. And additionally, there's concerns around consumer protection. So prediction markets are available to people 18 to 18 plus, where a sports book is 21 plus. So protecting that younger demographic, and also just for gambling addiction and different resources and different things that the sports books have learned to flag behavior. Um, States are concerned about that for prediction markets. So there's a lot of lawsuits. There's a few big cases that we're watching. So New Jersey that case has already gone to a federal Supreme Court circuit. And New Jersey actually ruled in favor of Kalshi, but one of the judges had a dissenting view. So that would be the quickest path to the Supreme Court. Beyond New Jersey, Nevada, we're waiting a decision from them on whether they rule with Kalshi or rule in favor of the state. And then Maryland is the third case that is already in the federal circuit. So we talk to legal experts on this all the time because it's a big risk for prediction markets. And now that our companies are getting involved in prediction markets too, most of them expect that this will all go to the Supreme Court probably late 2027 or early 2028. And it will be decided if prediction markets can continue to offer sports event contracts. There's a possibility that there's a split ruling. So you could argue that an NFL game or the World Cup there's an economic consequence. So if you're a bar owner in New York, the further US makes it, you'll generate more revenue potentially than not. So there's an economic hedge that prediction markets are arguing for things like player props or parlays. I think that's where there's a little bit more skepticism around what is the economic hedge in that case, and that's what the Supreme Court will have to decide in a year or two.
Okay. All right. Lots more to discuss, which is why you're busy all day long talking about this.
Yeah.
But we only have so much time. I guess we'll have to, there'll be some evolution. We'll have to come back to it. But I really appreciate all the thoughts.
Yeah. Thanks for having me, TJ.
Prediction market volume has doubled just since the start of May. The FIFA World Cup has contributed, but there's plenty of room for growth from here, especially considering the pop culture bets and financial market bets, which are currently dwarfed by sports betting. Also, while the World Cup won't be back for another 4 years, there's evidence to suggest it's brought many new bettors to the platforms. Online brokers may also be well positioned to grow in these markets, especially as there's a lot of overlap between certain types of traders and sports bettors. All that said, there are court cases to watch that could change the outlook, and many states have sued the prediction markets. Ultimately, the exact shape of these PMs will probably be decided by the Supreme Court later next year. Thanks for joining.
Bank of America and BofA Securities are the marketing names for the global banking businesses and global markets businesses, which includes BofA Global Research of Bank of America Corporation. Lending, derivatives, and other commercial banking activities are performed globally by banking affiliates of Bank of America Corporation, including Bank of America N.A., member FDIC. Securities, trading, research, strategic advisory, and other investment banking and markets activities are performed globally by affiliates of Bank of America Corporation, including in the United States BofA Securities Inc., a registered broker-dealer and member of FINRA and SIPC, and in other jurisdictions by locally registered entities. Copyright 2026 Bank of America Corporation, all rights reserved.